let us take up in terms of question and answer. So if you have any query, you can raise your hand and my friend will come there and give the mic. So you have one query.
Good evening, sir.
Yeah, good.
Absolutely great to listen you live today at Motilal Oswal Tower. Had just one query regarding investing, which you have said. Audible? Supposingly, as you have said, through that size, quality, longevity strategy, if we identify, say, 2, 3 stocks, like right now, I am very positive on this IDFC institution because I think that IDFC Bank, which will roll out, it has a potential to be the next HDFC or so. So, is it good to invest the full surplus amount, the corpus amount in IDFC itself, or is it good to distribute within 2, 3 stocks, which I feel has a potential to grow in smaller quantities?
So portfolio construction is very important. Unless you are 100% sure. See, there is a formula 2p minus 1. So probability multiplied by 2 minus 1. So if you are 100% sure, so 100 into 2, 200 and minus 1. So you should put 100% if you are 100% sure. But nobody is ever 100% sure that future is going to unfold like this. So to take care of the uncertainties of the future, you need to diversify the portfolio. So maybe if you are a very aggressive guy, you can find another stock and put 50-50. But we diversify among the 15, 17 stocks because on an average 7-8%, different thing will go up to 9%, then will 9%, 6%, 3%. So we put in various buckets. So, but higher confidence, we put higher amount because it's a public money at the end of it. My personal confidence, a very high order. We cannot put 50% of the client money into one stock, but you can personally do it.
There are two things going on in oil and gas exploration and oil marketing companies. Oil marketing companies, okay. Government is going to reduce the subsidy for this ONGC, Oil India and other things. And at the same time for oil marketing company. If it subsidy is reduced to zero, what will the future means? Oil marketing company will be worth for investing? Say ONGC is paying around 50,000 crore subsidy. So what will the value after 1, 2, 3 years?
This oil, see, what are the fundamental change in this decade? I will not give you stock specific stuff, but I'll give you the background. We have bought these stocks, it's there in the portfolio. But what is the logic behind what we have bought? See, the first decade was impacted by the oil price going from $25 to 125. What it did, it destroyed the companies because the government decided to not pass on the entire impact onto the consumer. So it destroyed the companies, it destroyed the country. The fiscal position of the country was destroyed completely. None of the budgets after 2003 is honest budget. Every time they used to defer 50,000 crores, 1 lakh crore, 2 lakh crores into the next year. And they never paid full bill to any of these companies, ONGC, HP, BP, IOC, GAIL. Everybody suffered. So it destroyed the country. Now, thanks to Shell Revolution, oil has collapsed from 110 to 65, 60, 70, whatever it is. Even if it is 75, it's a huge correction. And more importantly, it is not going to go up. So this decade will build the companies and build the country. One of the reasons I'm very bullish is that energy prices are very, very reasonable. Because we import 80-90% of the energy. And if energy prices going up every year by 10%, you go bankrupt. Whatever you make money, all the software guys who exported $100 billion, the whole thing went in paying the oil bill. Now in the next 10 years, when the tech exports go from 100 billion to 200 billion, the whole money will be available for making the roads and bridges and everything. So I think we are going to see a very different future. And the companies which are there is HPP, IOC, These companies are distribution companies. They are supposed to make 1.5, 2 rupees and make some margin on the refining. So I think they should make that money. Government is allowing them, and we think that they will get their old glory back. And of course, the SR and your Reliance and all, they have opportunity to come on the private sector side also. Another thing is that private sector cannot squeeze the public sector the way they used squeezed in the earlier government. So that advantage is also there. So clearly, it's a very, very positive environment for these companies. They are very reasonably priced at present. These are very large businesses. I mean, 2 lakh crore, 2.5 lakh crore single companies turnover. And if they make 3-4% profit also, today HP is a helper for 25,000 crores or 27,000 crores. They have a turnover of close to 2 lakh crores. If they make 3-4, even 2% profit, you can do your numbers. So clearly, opportunity is there. Whether people don't believe whether government will continue in the years, because last 10 years it has been very bad. So they are extrapolating the last 10 years into the next 10 years. But these are changed times. Government will behave differently in the low oil price scenario. So we remain bullish on to this kind of situation. Okay.
Hello. Excuse me. May I ask you one question, please? Thanks for inviting such a good event. What are the administrative charges for these PMS funds? And is there any locking period? And what is the exit period?
So you discuss with your representatives, the commercials and all. They're very reasonable. Don't bother about the rates. It's not about the rates. Even if I do it for free of cost, don't give it to me if you're not good.
No, just I want to share one experience with you.
Yeah.
I invested 10 lakhs rupees
Yeah.
with one reputed reputed investment fund. And very first year they deducted 20%, next year 15%, and very next year 10%. So now what are all these things?
This
It
must
should be very clear before investing.
Are they insurance companies?
Yeah.
Yeah. So that is a different thing. This is you are getting your 100 rupees day one, right till end. 100 rupees will remain with you. I mean, these are your, see, PMS is nothing but your own account. It's just that we are managing for you. The stocks remain in your name, under your control, just a power of attorney is being given. So you get to see it every day. There's no, nothing like that. Yeah. You speak to your representatives, they will tell you what are the commercials for that.
Thank you.
I had a quickly, I am a chartered accountant. I've been meeting a lot of my corporate clients and all retail people, and the ground reality seems to be very bad. All the retail guys are trying to say, boss, no businesses at all. The mid-size is also in a panic situation. The corporate is not gung-ho about equities are really, how to really look at this. And how do you really rate the efforts of the government for the first year?
So, I don't have any extra information than what you have about the performance of the government. I think they are putting their best effort. At least they are working very hard. And it's a large ship. India is a very complex country. Global economy. See, people undermine the weakness of the global economy. It's like when you fly your kite. आप पतंग उड़ाना चाहते हैं. यदि in the system there is no breeze, it becomes very difficult to fly. So India is like that. Right now in the global economy, that kind of current is not there. What was there in 2003 and all. So it will take some time. So we have to put extra effort. But they are the guys who manage their, who are tirandaj in terms of kite flying. They are still able to fly. So that's the effort required in India. Now we need double effort to fly at 8-9%. And that's the job Mr. Modi is trying to do. And I think, with a lot of, some of the things I also don't agree, but he has to sitting there, whatever is required, he is doing his best. At least he is working very hard, and his people are working very hard. Some places we are seeing some green shoots, like in road sector, we can very clearly see the order book is building up, road construction has started. The biggest thing is that in last 1 year, everybody who comes from Delhi, he tells me that there is no corruption whatsoever at minister and secretary level. But below that, there is no impact. The people whom we meet, it is a business as usual, probably worse. They're asking for bigger premium. So I think those challenges are there. But investing is not about what government is going to do. Investing is about what you do to your money. There are still companies, not many companies, but at least 100, 200 companies which are growing at 25, 30%. So you have to position your portfolio in those companies rather than just throwing the assets anywhere. So that's the basic difference. Are you competent to pick up those winning stars and put your money over there? And if you buy 10 companies, of course 3, 4 will not work, but 5, 6 will work. So you have to separate the companies. And let me tell you, even in a good flowing economy, if you don't pick up right stocks, you can still lose money. Okay? So what is important today, I understand when the economy is doing well, many more companies do well. So for us, it becomes much easier. First thing, in existing portfolio, whatever is there, you can sell at higher price. Second, you have a wide variety of choice, which is not there today. It's a very narrow market, very narrow market. You need a lot of expertise, and you have to be very careful. And if you're not good at what you do, you might be really whipsawed big time. So that's the challenge. And it may continue for another 6 months or a year. We don't know. These kind of things, who knows when we'll grow at 6, 7%, 8% or 9%. So I also keep hearing from people that second half of the year will be better. But this we are hearing for last 3 years. So the second half comes and goes. Then the first half comes again. But I'm not dependent on this first half, second half and all. We have to go and figure out the companies which are doing well, position your portfolio. It is that simple actually. It looks as if, is it that simple? But it is that simple. Okay?
Sir, and a lot of companies with heavy debts, and there's a lot of issues which are being discussed all across the JVs of the world, whether they'll be able to really pay out the loans.
Yeah.
I think so. A lot of panic has got created in that segment also.
Yeah, it's going to be quite, this time, see, when you change the establishment in Delhi, after 60 years you had one way of doing business in Delhi. Today it is a completely different way of doing business. So a lot of people, they are very uncomfortable because it doesn't fit into their value system. So there is a disruption, So it is going to be quite painful for a lot of companies. A lot of these companies, they always had a hotline to Delhi. Hotline, lifeline, whatever, you know that. So those lifelines are cut. Nobody has a hotline to Delhi now. So you have to live by yourself. And living by yourself is very difficult. There is no grandfather or godfather to save you. So you have to earn. And when you don't know how to earn, it's a big problem.
Sir, what do you think about these e-commerce companies like Flipkart, Snapdeal, and a lot of new startups are coming? What do you think will their future?
Yeah, there's a lot of excitement.
Already so high valuation.
Pardon?
Is they are very high value company, high valuation.
Yeah. So, this is in the realm of private equity right now. It is not so much in the public market. Internet is a big thing. After 10, 15 years, it will be decided. Pre-internet era and post-internet era. So internet is becoming bigger by the day. So a lot of winners will come in this. But we don't know how to spot them. So what private equity guys are doing, they are buying whatever is coming in the hand. This com, that com, सब लेके आओ, 2% सब लोग खरीद रहे हैं, 25,000, 50,000 कुछ. One or two of them will become seriously large because internet is global. So something you buy at $2 billion or $5 billion and that becomes $500 billion or $200 billion. So that's how they want to make money. But I think there's a lot of froth in this. Because ultimately in a stock market, you are buying stocks. It must make money. They are losing serious amount of money. In fact, there is a competition who can lose the first $1 billion. So, I'm sure some of them will make money, but how much money, when, I'm not competent. So, for online companies, I'm quite old.
Hello, sir. I want to know, with a limited understanding of my market, that post 90. Excuse me. Can I go on with the question?
Yeah.
See, post this liberalization and all that, I have seen the Nifty and all that and markets flat from 90 to 2003. So with this kind of 10 years, stagnation, you suggested even in ETF, we could have made some money, reasonably good money. Now, senior citizens like us, if we have to look forward beyond 10 years, I don't know whether we'll be able to use this wealth for our purpose.
You're saying that will it require 10 years to make money?
Yeah, because this, in 92 to 2003, it was flat, as far as my understanding
Black,
is there.
yeah.
So 10 years is a very big period for any equity to
Yeah,
remain
that
flat.
it is quite possible index will remain like this. But let me tell you, we made our entire career between 92 and 2002. So we made a lot of money in the market. This index thing we started hearing only from 99 2000. We never used to know about index. Once this Nasdaq came and cable TV came, then only we realized that today Nasdaq is up, Dow is up. Then we also figured out where is the Sensex and all. But we were not looking at, if you were there in the market in 93, who was bothered about the index? At that time it was all individual stocks. And people made money between 90 and 2000 also. We made a lot of money. So the issue is that we don't have any clue where index will move. We hope that because in last 34 years it moved at 17%, we are just extrapolating that it will do very well. And second thing is that in 93, in Harshad Mehta boom, from that peak, Harshad Mehta boom time, it ended at 65 P multiple. When index was at 4200, the P multiple was 65. And it had moved very rapidly. So that situation can come, but not now. Right now, it will move from here to say 1 lakh index without much earnings growth. So a P multiple, which is say 15, 17 now, that can go to say 55, 60, 65. From there, it can take next 10 years to come back, which what happened in 2002 to 2003. Sorry, 1992 to 2003. That's what really happened. So what scenario will come up, how bigger bull run we are going to have, how irrational bull run we are going to have, we don't know. We are just hoping, but I am not concerned about whether it is a bear run or bull run. I am concerned about my 15, 20 companies, they are going to make money or not. If they make money, we'll be taken care of. And then if we are lucky, bull run will come and they will take us to different heights altogether.
Sir, in the case of a PMS, what is the frequency of churn that happens in the portfolio? Now, considering there is not enough churn.
Where is the guy? Hello? Yeah.
So,
yes, go ahead.
The kind of churn, because if I look at the kind of stocks that you displayed, if I take the 10, 15 stocks and I put it myself in a portfolio and let it be there, sit tight policy that I have, do you still think that I'll make a 15% year on year? Or is it, there is something in the churn of portfolio that you all manage that you are able to do a better job?
You're saying that if you copy the same stocks, can you do as well?
Yeah, exactly.
Yeah, so you can do well, probably you can do better than us. But you need to play the bets also. See, it is not only about the stocks, when to buy, how much to buy, how long to hold that. Say, we'll buy 5% United Spirits today, but the moment we see that the company is doing better, we'll take it to 9%, 10%, 12%. Then the moment we realize that it is slowing down, we can bring it down to 3% again. So if you can do that better than us, you will do a better job. But most likely with our portfolio, you will not do better. With your portfolio, you can do better. Because your alignment with this will be with your stocks. These are the stocks with which we are aligned, Yeah.
Hello. What's your view on the renewable energy sector? Hello. Yeah. Sir.
Where are you?
I'm here. Yeah.
Yeah.
I was looking at some of your mutual funds that you manage, top 25, top 35, and you said that one of the things you said, integrity. Now, what I'm trying to learn from you is that how does your fund manager manage my money, and what is the mechanism in place to protect my interest that he is not buying the stocks which he likes, but he's buying the niche companies or what is good for me as an investor?
So what is the role I play?
No, the question is that what is the mechanism in place to safeguard investors' interest?
I couldn't get. What is saying?
that what is the mechanism in place so that your fund manager is buying the best companies possible for to protect the client interest?
Yeah. So one is that he has to follow the QGLP process. Second, I am the chairman of investment committee. So every product has its own manager, and all the managers have full freedom to buy whatever they want to buy, but eventually they have to explain to me and his own colleagues whether it fits into the QGLP process or not. So if there is a mistake, he has to rectify. So there is a continuous, see, you have to doubt not the competency, you have to doubt the integrity. And I think if any fund manager has low integrity or lack of integrity, I don't think he's going to survive. So that's the key issue. I mean, choosing a competent fund manager is my job. And after that, competency will be guaranteed, integrity will be guaranteed, and transparency will be guaranteed. And after that also, if the job is bad, I mean, personally, I'll be responsible. Yeah.
Sir, what's your view on the renewable energy sector?
Just one second. What is the view on the renewable energy sector? So, we had one bad round in renewable energy. Now another one is coming up. So, see, renewable energy is all tax shelter. One of the things is that they are not true businesses. They are all tax shelters. And selling tax shelter becomes crazy at times. So you have to be very careful whether, that company is well managed.
Anyone in your mind?
No, I will not name anything. You have to take care of yourself. Yeah.
Hello?
Yes.
Hello?
Yes, lady.
Can I ask a question?
Just one sec. Yeah. हाँ बोलिए.
Sir, in PMS scheme, what interval you churn the portfolio? Like just now you said that when you like the stock, you increase your stake from 3% to 9%, then it comes up. So how often you take that decision?
Yeah. So typically, out of 15 stocks, 2-3 stocks will change in a year. Definitely 2-3 stocks. But if situation warrants, we may have to do more. But typically, our experience is that many years we don't do any change. In fact, a lot of clients they think that why should I pay the fee if you're doing nothing? So churn is very low. I don't think it will be more than 2 or 3.
Is it based on quarterly results of the company?
No, it is based on a lot of things. By our own mistakes also. If we have misunderstood the company, we have to correct it, no? So, and if the quarterly result is bad, then also I have to correct it. So there are a lot of factors, government regulation, slowdown in the economy, slowdown in the company, bad profit margin, increase in the raw material cost, CEO moving out, currency going against. So there are a lot of factors on which we can decide.
So like on everyday basis you are tracking those things?
By the hour basis.
Yeah, on company specific.
Yeah, the whole portfolio, see the portfolio manager's job is 24/7 to take care of his portfolio.
Okay. So, but do companies are like giving you information on everyday basis what is happening in that company itself?
No, some of the information come from the company,
Right.
and a lot of information is outside the hands of the company. If iron ore prices goes from say $60 to $200, उसमें company को बोलने की क्या जरूरत है?
Yeah,
आप तो देख ही रहे हो ना? और rubber price go from say 120 crore rupees a kg to 300 rupees a kg. You have to go and sell your MRF.
So that is related to sector, like okay, because there will be
So
so many companies. in
yeah, so
sector.
every company has its own set of factors which you have to keep waiting for. Okay. Yeah.
Hello, sir.
Yeah, बोलिए.
2 questions. One is in PMS and in mutual funds, do the portfolios mirror each other? I mean, they are similar. And the second question is, since you follow the principle of sitting tight, will not be booking short-term capital gains in PMS?
Yeah. So portfolio is not, it is similar in the sense that we have about 55-60 companies total in the AMC. So when the companies, when the manager wants to buy 15 companies, so he buys any of the 15 companies. So the combination will be different, but you'll see a lot of overlaps. Like you'll find in the mid-cap strategies, you'll find 3-4 companies common in the 2 portfolios. So there'll be a lot of similarities, but as a portfolio, it will be very unique. Like if you go to other competitors' portfolios, you'll find some companies are mine over there or their companies in our portfolio. So it will be that kind of thing, but it will not be a replica of each other.
Talking of your PMS and your mutual funds.
I understand.
Yeah.
lot of companies will be similar, but the portfolio will be different. See, like say in mutual fund, say F30 has say 20 companies, and NTDOP has say 15 companies. So 5-7 companies will be common. You understand what I'm saying?
Yeah, got it. But the returns wise, which would be better?
It will be, of course, it will be different. A percentage plus, minus, whatever. I mean, these are different portfolios managed by different managers. So there are 3 PMS, 3 mutual funds, and all 6 managers are different. They follow the same strategy, same value philosophy, and then the race starts.
And in case of PMS, short-term capital gains?
Yeah, so there, because our churn is low, there is very little short-term capital gains. Mostly it is 3 years, 4 years kind of thing. So very, very little short-term capital gain will be there. Very rarely. But we don't calibrate any of the action because of the tax reasons. We will move ahead and do it, even if it is short-term capital. But the history, I mean, our holding period is typically 5 years, 10 years, 15 years. Your short-term capital gains will be very little.
Good evening,
Excuse
sir.
me. Can I ask the next?
Yes, ma'am. Yeah.
I have been an investor in your PMS, in fact PMS for quite some time now. And the typical investor psychology, at least mine was, I have allocated my funds to a professional, experienced investment fund manager.
Sure.
So I need not look at it. Because, you know, I mean, typically you don't look at a PMS product and even review it every quarter, as you would normally do in case of direct equity or mutual funds. So what happened was, when the 2007 big crash came, it just didn't happen with our country, it happened the world over. And nobody had an inkling about it, right? So the investors suffered the aftermath for almost 3-4 years. My question is, if the experienced professional fund managers and if that can't see that, even the investment committee couldn't see the early warning signals, what confidence will we have today to allocate a big chunk of our investment again in PMS?
How has it done for you?
Sorry?
End to end. When did you start?
What?
When did you give the money to us?
That was in the year 2003.
3.
I mean, I'm not talking about Motilal Oswal, I'm also talking about the other.
No, so let's talk about Motilal Oswal. So 2003, the money you given, we have seen the 2007 slump and recovery.
Yes.
How has your portfolio done?
For 3 years, it bled.
Leave aside those 3 years. They are
Yes.
part of the 12-year journey, isn't it? Is it up 15, 20 times?
Oh yes, finally it made up for it. But
Yeah.
my specific question was, when something like that happens, okay, and I did not see any communication even come from the portfolio managers. So what do the investors, I mean, what are the investors supposed to do?
Very good question. See, the point is, even manager doesn't know. What happens is when the ride starts, when the so-called the blast happens, the last phase of the market, you know, that last 2-3, say like what happened was 2008. So by the time it was December, January of 2007, we knew market is hitting almost the end of it. But every month was 6%, 7%, or even 10% of the market. So if you miss the party for 10, 15 days, you would have lost a lot of return. So even the manager doesn't know when to sell. Because if you sell, the client feels very bad. Because you sell today and tomorrow it is up by 3%. So what you're saying today, if that day if I had sold it in say 6 months before, you would have been very badly off. So it's a big dilemma. What you're saying is you expect the manager to know the top and bottom. But he doesn't know. He's as big a Bewakoof as you. He just doesn't know. He doesn't have any way to figure out. It's all looking back. See, the top of the market is all for the fools and liars. And by the time it starts crashing, it crashes in 5 days. In 5 days, 60-70% is gone. What do you do? So there's a lot of helplessness out there. You want to time the market at the top. And let me tell you, a lot of dear friend of mine who got it right, almost right, they couldn't buy it at the bottom. They remained out of the market. When they bought it higher than the price at which they sold. So this is the classic dilemma of the market. I hope you are understanding what I'm saying.
Yes.
You know, timing the market is very difficult. At least we are not competent. If you are thinking that you think we are experts, we will be able to see the next bull run, and right at the top, we'll pull you out, we'll advise you, please take your money out. We will see, if I become insightful, I will tell you, without any hesitation. Even at the cost of business, I'll tell you, you will not be able to execute, I'm telling you. You will be in the full grip of greed. You will be so greedy at that point of time. You will not listen to me. So it's a human behavioral, conundrum, where first thing, you cannot see the future very clearly. Second, in the grip of the greed, you will not sell. And when it hits the bottom and I'll tell you buy, you will not buy because of fear of losing the money further. So that's the characteristic of the market. You have to, that's why we say buy right and just hold on. These gyrations will come. But good thing about the market is it will never go down by 50-60% unless it has risen by 300-400%. Never. That 2007 slump happened because of the bull run. I wish I could show you some, I think there must be something here. Yeah. So if you see, can you see the, is it making a difference? See, if you see the 2007-8 chart, it slumped vertically. But for the slump from 2002, it was about 2,200 or something. The index, this is Sensex, yeah, Sensex was 2,200, which went to 21,000. So it grew by almost 7 times before it slumped. The index went 7 times, but the stocks went 10 times, 15 times. Your own portfolio went up so much more than the index. And then it slumped. And then very quickly it recovered. So that, that V-shaped recovery is the price you paid to be in the stock market. But you should have bought before. And I don't think you would have ever gone below your initial purchase price. Never it has happened. So that's the character of the market. And I can guarantee you, इससे भी बड़ा होने वाला आगे. It will be much bigger bull run and much bigger decline. I mean, almost guaranteed it is going to happen because future is exponential. Every bull run, I've seen 4 of them, 85, 92, 2000, 2007. Every time it is bigger, more complex and far more severe. And with this kind of money world over, zero interest rate, trillions of dollars flowing, we are in for a crazy time.
Good evening, sir.
I think, yeah, last question.
Excuse me. Yeah.
Yes, sir.
Raamdeo ji. Yeah. This way to your left.
Where?
Left, here.
Yeah, okay.
My question is on the NPA problems being faced by the banks. Now, the steel sector itself is a big problem, which is not being shown by the banks. The economy cannot grow without the banking sector, that's sure. But this kind of an NPA problem, where do you see this heading?
It's the biggest failure of government so far. I mean, 2 problems. Government has not fully applied their mind to the NPA problem and T&D losses in the power sector. So,
and the steel sector?
Steel sector is their own making. I mean, it's a global slump and those kind of things. But NPA problem is a big problem. I don't know how they will sort it out. And so, I mean, what will happen is when the economy grows, all these private sector banks will grow at a rapid pace, very rapid pace. But instead of 25%, they'll grow at 30%, 35%. Good thing is that we have at least 8-10 of them, and they're much bigger in size. In 2003, they were very small. Today, balance sheets are running into 3-4 lakh crores for individual banks. ICICI, HDFC, Axis, Yes Bank, IndusInd Bank, they're very large. So I'm sure the disproportionate, responsibility of funding the growth, the banking system has to be done by private sector banks.
But sir, the private sector bank does have an exposure to the steel sector also.
Yeah. So,
and my question is, should the private sector bank be preferred to the PSUs, or PSUs should be completely out of your portfolio?
I didn't get what you say.
Should PSU banks should be completely out of your portfolio, or just stick to the private sector banks? That's the question.
See, you should have a lot of money into private sector banks, but it's your call what you want to do with the public sector banks.
Point is value. Where do you find the value?
You have to find value. You are running your portfolio. You understand what I'm saying? You have to see the value. My seeing the value is not going to help you. If I see value today, tomorrow I don't see it, you will go and buy, then what? Then what will happen?
So I'm asking your call on the PSU banks today. What should be the call being taken on the PSU banks?
So I have taken a call that I'll stay invested in SBI, nothing else. Yeah.
That's what I want.
Okay. Thank you very much.